Thank you for joining me on Financial Education. Today I want to go over what is the S&P 500 and why is it the most important index we have right now. Now, that is almost true, but not quite. It's just the most important well-known index. I would argue that the Russell 2000 is more important, but no one really cares and no one really knows the Russell 2000 or what's even in there. So, the S&P 500 consists of the 500 biggest companies in the US. They are the biggest by market cap, not by revenue, not by profit, which is why GE is still in there. So the 500 biggest companies means basically any company you can think of right now. If they're publicly traded and they didn't go public this or last year or maybe 2 years ago, they're probably in there. Now, to get into the S&P 500, you have to have 4 profitable quarters. They have to be overall profitable, not every single one of them, but you need to have a profit over the past 4 quarters. So that is the only reason that Tesla is not in there right now. But Amazon is in there, Twitter's in there, Netflix is in there. Basically, every American company that you can think of, if they're on the stock market, they're in the index, which is why the S&P 500 is such a great indicator of how the stock market is doing at any given time. And the way that they calculate the index is basically add up the market capitalization of all the companies and then divide it by a proprietary number, which is apparently around 8.9 billion. So that's how you get to the number that the index is right now. If any company rises, obviously the whole index rises. If any company drops, the whole index drops. And the market capitalization is calculated every 15 seconds. So it obviously, with 500 companies in there, it doesn't make any huge jumps. If there's a huge market downturn, the S&P 500 will show it. If stock markets are doing great, the S&P 500 will show it. If any one company in there is doing great that day, you won't notice, because unless there's multiple, maybe tens, maybe hundreds of companies that are doing well, you will not see the S&P moving any at all, really, on any single company going up or down. Now, the index has gone up 9% annually over the past 25 years. In total, since 1970, the index has gone up 122 times, or 12,200%. So if you had $1,000 in 1970, you would have $122,000 now. Or more importantly, the index roughly doubles every 8 years. So that means if you invest $10,000 into the S&P 500 now, which is what you should do, probably, you would have $20,000 in 8 years, you'd have $40,000 in 16 years, you'd have $80,000 in 24 years, and in 40 years you'd have $320,000 just for investing $10,000 and leaving it alone for 40 years. So compound interest is a great thing. Obviously, that's why most people say that you should just buy an S&P 500 index fund and just leave it alone for however long you want to invest. So let's say you invest $1,000 a month for $12,000 a year. The first $12,000 over 40 years, as I said, will go up to over $350,000. And then in a year, you throw in another $12,000, which will also be worth over $300,000 in 40 years. So you can see how things start to add up really quickly if you can actually manage to save money every month and stick it into an index fund. Also, the index is not the same as an index fund, but effectively it's the same thing, which means that any index fund tracks the index so closely that there's no difference between the index going up and the index fund going up. It's going to be two fractions of a penny, exactly the same amount. Also, if you stick money into an index fund, most brokerages will not charge you money to buy and sell shares of the index fund. Which means if you go to Fidelity right now, if you go to Vanguard right now, ticker symbol for the Vanguard 500 is VOO. It tracks the S&P 500. You can buy that without commission. You can just stick $100 in there if you want to, in a standard brokerage account. So you don't need to have a Roth IRA or a 401k or whatever. You probably should have a Roth IRA, and if you don't have any other retirement accounts or brokerage accounts, Roth IRA is probably the best one to start with. So invest money in the S&P 500, leave it alone, be rich in 40 years. That's the best advice I can give you. Make sure to subscribe if you want more videos like this. I post every day before market open. Have a good day.